Welcome back again. Welcome to Business Income Part 8, Business Income Made Easy. This part's going to deal with business income and extra expense as it's written on the business owner's policy, which we refer to as the BOP. The reason this is important is because so many of our businesses, small and medium size, are now written on a BOP. That's a departure of how it was originally intended some 15, 20 years ago when it was designed for the very small risk. But now we're seeing medium-sized risks. We're even seeing manufacturers issued on a BOP. So it's important that we understand how that form is going to respond for business income and extra expense. They're different, and there are important differences. And so I'm going to highlight each one of those. And we do have some advantages, but I think more often we have disadvantages. So let's think about this now. The BOP automatically includes business income and extra expense. It's not an endorsement. It's not a separate policy. There are not that many endorsements available on this form. So it's actually automatically covered. It's going to be a section under the policy. The BOP and business income has no limit of insurance. Now, this is interesting. It's an additional coverage. It's not sublimited, and it's actually not subject to the limit of the policy. And this is why for so many years we referred to this as an actual loss sustained policy, although I would say that all business income forms are actual loss sustained. We'll pay for the actual loss you sustain. That's the language. But the difference here is that it's limitless, unless, and this is the caution, some companies now are putting limits on the business income. And they're not necessarily putting it on the declaration page, but rather they're putting it inside of the policy. This limit actually comes from the application that you have submitted. And many times the BOP carriers are asking you to put a limit down. So up until this point, that limit really was more of an indicator to the company, kind of a guideline. But now we're actually seeing where it's within the policy language. So caution on that and how you actually explain this to your customer. Caution. This form only pays for 12 months, and that may not be enough. So with a normal business income form, we're going to pay for the period of restoration. That period of restoration might last a year, 2 years, 3 years. As long as I have enough limit, that policy is going to continue to pay. This policy has a 12-month stopping period. And so you really have to be very cautious about that. Now, you may say at this point, why don't I put the extended period of indemnity on this 12-month policy? It's because the 12 months is going to stop. We still may not be restored. And the extended period of indemnity only kicks in at the point of restoration. And so you might be out months or years, depending on the kind of customer that you have. And remember, this BOP has been opened up now to middle market and to some manufacturers. So again, I caution you. The BOP only has ordinary payroll for 60 days. Whenever I teach and I bring that up, it's one of those issues that nobody's even noticed or thought about. It's built into the policy. You can go ahead and add more ordinary payroll if you want to, but you would have to know to do that, and it would have to be on the declaration page. So again, caution, that is a limitation. The BOP includes a sublimit for dependent property coverage, and your typical ISO version is going to be within the $5,000 range. Now, caution with this as well. Because if you're insured, and again, let's say a manufacturer has a dependency, which we also used to call a contingency, on another business to supply them parts because it's their only customer and they're the recipient of product, it would be a big mistake to have a cap of such a small limit like $5,000 for dependency. Normally, dependent property is written either for the same limit as the business income policy or a fairly substantial limit. So again, even though this looks good, it is a very, very small amount of insurance. So in conclusion, the BOP has some advantages. The first advantage is that it's automatically covered. So we don't have to think about asking for it to be added on. The second is that the limit is not part of the limit that's being written, and so it is an actual loss sustained form unless otherwise indicated. The disadvantages: it's 12 months, we have a 60-day ordinary payroll that's built in, and we have a sublimit on the building ordinance, which would be woefully inadequate in most cases. So in our next session, we're going to discuss how we actually start insuring for the various options on the commercial property policy. The commercial property business income form is an attachment. This is where we begin to get very serious about everything. We're going to start talking about coinsurance, maximum period of indemnity, monthly limit of indemnity. So get ready. It's going to be a tough one.
That was easy.